Hi, everybody. What you are looking at right here, right now, is a chart of sterling yen, and it shows the last trade that my system TRIPWIRE took entering long 2 days ago, just on the Bank of Japan announcement here. It entered a long position and it took partial profits at PT1 and PT2, where a third of the position is exited. And it held the last third of the position until the time exit kicked in at yesterday's close. So that's essentially what TRIPWIRE does. It has three different entry criteria to take a new trade. And when it takes the trade, it manages it dynamically with a trailing stop. So let me just show you how the system works in terms of methodology. So one of the signals that we have is the NBO, which is basically a low volatility breakout system or trigger. So what we've got here is the market ramping up and then settling down into a little bit of a range and then following through on the next bar and breaking high and then seeing an explosion to the upside. The sell would be like so. So there it is. That's the opposite. That's the sell. So the market is trending down, settles into a bit of a narrow range, and then you get the continuation, and then down the market goes. And then when the trade is on, it's managed dynamically, as I say. This is the long trade, how it's managed. So once you enter a long position, once TRIPWIRE enters a long position, it buys effectively 3 units, which it hopes to sell at 3 different places. So PT1, PT2, and then the time-based exit, which we saw at the very start for sterling yen. So enters a long position, puts a stop where it puts a stop, and then takes profits on a third of the position at the target, moves the stop up from the risk level to entry point once we hit the target. And then once we hit the second target, the stop is moved again. And then hopefully we hit the time exit and say thank you very much. Same for the sell. Enter a short position in 3 units, put the stop where the stop should be, hit PT1, buy one back, lower the stop to break even, hit PT2, buy another one back, lower the stop again, and hopefully come in on the time-based exit and say thank you very much. So that's the kind of the theory as to how it works. So let me just quickly show you a few of the charts that a few of the markets that TRIPWIRE works quite well on. So that's obviously sterling yen. Let's just show you the performance summary with the equity curve. The most important thing I would say is the equity curve, because that gives you a flavor of how the system works over a long period of time. This goes back to 2005. So what you can see, it's a bit like looking at a long-term equity chart. We get the market moving, making higher highs and higher lows and pulling back. These are drawdown periods where the market or where the system gives back some money. Some of those drawdown periods can last several months. But most of them, if not all of them, end up being turned around and seeing new equity highs. The green dot on this chart is a new high for system equity for that particular market. So that's sterling yen. Let's move on to show you some other markets and trades. Okay, so this is cable, sterling dollar. It's coming through. That's the chart of the equity line of sterling dollar. So this one you can see actually had a nice steady uptrend. It topped out some time ago, had a bit of a drawdown and started to move higher again. All quite good. And this is a trade example on cable sterling dollar. So a buy signal here on the NBO. Up it goes, hits the first target, chop, 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 comes back down into the next day, and then boom, up it goes to the second target. And now we're holding it until the time-based exit kicks in right there. Not a bad trade. We move forward a bit. We see another trade here. We buy it. This one loses money, the long position, but then we go short right there. Boom, we hit the first target like so. Move along. And the trailing stop, we hit the second target there, and then the trailing stop kicks in, and that's the end of that particular trade. Look at another market. This is dollar yen. This is not a bad short position on the NBO there. Sell short, buy one back, hold it, and the trailing stop kicks in. Gave a little bit back from the swing low, but not a bad trade all told. Next trade, there's a buy on the NBO again. Up it goes to PT1. comes back down, hits PT2 on the next day on that ramp up in Asia, and then a bit more of that action there, and then again taken out on the trailing stop. Let's look at the equity curve for dollar yen. Coming through. There it is. So you can see again, back to 2005, it's flatlined a little bit of late, but all told, if you trade these systems with several different markets at the same time, these drawdowns that you see, they will be negated by rallies in the equity high, in the other markets. That's essentially what I do. I trade them as a portfolio. I put them all together in a portfolio and I work out the correct sizes, the risk, etc. And essentially what you get is when one market or two markets are drawing down, the other ones typically will be drawing up like so. Okay, that's dollar yen. Euro yen. Here's an example of euro yen. On this particular day went long, hit the first target, banked the profits on the third, and then the trailing stop kicked in on the next day and then took the position out. And then we got a nice short position there, PT1, PT2, and we hold it until into the end of the next day, until the time exit kicks in. Very powerful stuff. Equity curve on euro yen, coming right up. There's the equity curve on euro yen, a nice steady upward trend there. That's quite a deep drawdown there. Back in 2008, January to July into August, quite a long drawdown. But as I say, when one market is drawing down, the other markets should be drawing up, making new equity highs, hopefully. And that's really the secret of trading as a portfolio, trading various systems at the same time as a portfolio. Just moving on here, euro dollar. Here's an example of a euro dollar trade. NBO buy, sideways, boom, boom, like so. PT1 and PT2. And then next day, taken out on the trailing stop, just moving forward again. Short position there. PT1, PT2, trailing stop. Another one, short, PT1, trailing stop. Okay, euro dollar equity curve. And by the way, this is trading exactly the same model on all of the markets using the very same input levels, which I think is quite rare. I've seen loads and loads of systems over my career, and most people say, well, you know, I'm going to use this system in this market, but I'm going to tweak it. I'm going to change the input values, maybe use a bigger stop or maybe use an earlier entry level, that kind of thing on a different market, just so that we get a better result. But ultimately what you're finding is you're curve fitting, you're moving things a little bit you're making it too good, which is never really a good idea. Okay, that's the euro dollar equity curve. Let's move on. Now, as I said before, that this thing works quite well on cryptocurrencies. This is Bitcoin. Here's an example of a Bitcoin trade. NBO buy there, PT1 pretty quickly, PT2, and sideways, and trailing stop takes you out. Next trade, a few days later, NBO sell, PT1, PT2, and taken out on the trailing stop again. Just looking at the Bitcoin equity curve. Now, don't forget, the cryptos have not been going quite as long as the FX. The stuff I've got goes back to 2018. So you can see that it's been making new equity highs lately, been quite good lately. There's been a long period of drawdown here. So that's something that would have kept you from making money for a short period of time, but does quite well all told. Ethereum actually does better than Bitcoin with this particular system. Let's show you a couple of examples here. So this is another NBO buy here, around 2460 or so. Up it goes to PT1, boom, sideways, into the close. Next day comes along, and we trail the stop, we get out. Next trade, NBO buy there, PT1, PT2, out on the trailing stop. Next trade, in on the NBO, PT1, PT2, out on the trailing stop. And one more for good measure, maybe. Let's see what we got. Wait a few days for the thing. There's one, and just taken out at break even. Okay. So let's just take a look at the equity curve for Ethereum. That one's been going great guns recently. You can see better than Bitcoin over the same period, back to 2018. Again, long periods of drawdown. Not the end of the world if you're trading it alongside other markets with the same system. So recently, it's had a really good run up in equity. You can see it's just really blasted higher. Okay. And then we're back to the sterling yen, which we looked at the very start. So you can see essentially what the system does. There are three different entry signals, as I say. Let's just show you what we have here is the narrow bar breakout. So this is kind of a low volatility breakout strategy. So the market ramps up in volatility, goes sideways, and then we get the breakout in continuation. That's the buy signal, and you're looking to benefit from a big ramp up in volatility. The sell example will be here, like so. Market ramps down, we get the sell, we get the breakout to the downside, like so. Also good to show you one of the signals that I use within TRIPWIRE is based on what I call break and retrace methodology. This is my own proprietary methodology where the market traps the participants. So in this case, what we've got is the market ramping lower, breaking sharply lower, maybe on a piece of news, maybe just on a break of support. And then for some reason, we start to get this retrace as short sellers start to cover. And then once we get to the critical mass level, the tipping point, the origin of the move, we know that all of the sellers under this blue line are trapped. And that creates the conditions for a short squeeze higher. And that's one of the components of TRIPWIRE. Okay, I think that'll do for TRIPWIRE for the time being. If you're interested in it, it's now available on a fully disclosed basis for the very, very first time. So if you're interested in it, give me a shout and I will explain a bit more as to the next steps. Thanks very much.